Good afternoon, everyone, and thank you very much for joining us today for the opening session of Day 2 of FICCI CAPM 2022. We start the day with the session on Financing India's Sustainability Agenda. We are pleased to welcome Mr. Sujoy Bose, MD and CEO, National Investment and Infrastructure Fund. Mr. Bose is a business leader with over 3 decades of extensive experience in emerging markets investing and project finance, covering infrastructure, industrials, and service sectors. He has worked on projects covering over 50 countries across Asia, Africa, Europe, Middle East, Latin America, and the Caribbean. Prior to joining NIIF in 2016, he spent over 25 years at International Finance Corporation, the private sector investment and financing arm of the World Bank Group. I now invite Mr. Bose to deliver the keynote address.
Good afternoon. It's a pleasure to be part of FICCI's 19th Annual Capital Markets Conference, especially to speak about a subject which is really close to my heart, which is the financing of India's sustainability agenda. India's sustainability agenda has been clearly laid out in the Panch Amrit Declaration by the Honorable Prime Minister at COP26. The 5 sustainability mantras are non-fossil fuel energy capacity to reach 500 gigawatts, 50% of India's energy requirements to come from renewable energy, reduce total projected carbon emissions by 1 billion tons, reduce the carbon intensity of our economy by 45%, and achieve net zero. The first 4 of these mantras to be achieved by 2030 and net zero to be achieved by 2070. India's sustainability agenda is not just an environmental commitment. It has important economic and growth implications as well. As India moves along the path of sustainability, India can become a hub for new technology and its deployment. For example, in the field of green hydrogen, drawing upon its learnings from the renewable sector, India can champion a significant lowering of costs compared to what is available in international markets. As new technologies and regulations move towards promoting sustainable lifestyles, investing in sustainability is required to be at the forefront of new industries. This will create a leadership position for India in sectors of tomorrow and create new, possibly higher income jobs for such industries. As is said, investing in net zero is a net positive for the economy as well. India needs to invest trillions of dollars to meet its net zero by 70 objective. Estimates run from hundreds of billions of dollars over the next decade to over 10 trillion over the next half century. This is a significant proportion of India's current and projected GDP. To get a sense of broad numbers, just going from the current 160 gigawatts of installed renewable capacity to 500 gigawatts, India will require over $200 billion of investments. This does not include expensive technology like offshore wind, where the capex cost per gigawatt could be much higher than for solar and wind. Similarly, our estimates indicate that to create an annual supply of 7 to 8 million tons of green hydrogen will require a cumulative capex of 160 billion, with more than half of it actually being invested in generating renewable energy. The electric vehicle ecosystem will require another 180 to 200 billion dollars by 2030. 3 types of capital will be required from resources, risk capital, and debt. The government has shown the way via the regulatory innovation in the case of renewable energy. The creation of Solar Energy Corporation of India, combined with tools such as priority dispatch, was crucial to give a fillip to private investment in the renewable sector. And these steps helped create massive scale, which brought down overall capital expenditure costs. The result is now that renewable energy generation is in many cases cheaper than coal-fired power. In fact, in the month of July, India produced 14% of its energy using renewable sources. Equity capital for renewable energy investments is coming mostly from foreign investors. Even for homegrown companies, the investors are now largely foreign. Creating institutions that are aligned to link international and domestic finance to climate-related projects can help create local capacity and enable faster deployment. The case study of the Green Growth Equity Fund in India is interesting in this regard. Seeded by NIF with a commitment of $170 million, along with a matching commitment from the FCDO, the Foreign Commonwealth and Development Office of the UK, GGF has gone to become one of the largest single country climate focused funds in emerging markets with a corpus of $740 million US. The fund has attracted marquee investors from across the world, including the Green Climate Fund. With about just $85 million of Government of India commitment, this platform has crowded in 9 times of that amount from others. In fact, taking the project entities that GGF will further invest into and the debt in those entities, the ultimate leverage of the government contribution could be as high as 25 to 30 times. As these green industries mature, companies will require large amounts of debt financing. We have seen this in the solar sector as well, and this will soon be required in other renewable sectors and new sectors such as battery storage, electric transport, and so on. Currently, Indian banks and capital markets, mutual funds are supporting such debt. Domestic institutional capital from insurance and pension funds will be needed as well. Institutions such as NABFID will certainly play a crucial role in providing long-term, low-cost debt capital. Funding across the range of equity, debt, mezzanine, impact, grants will be required and will vary spanning the risk-return spectrum of the industry. Each type of capital will also segment itself into different categories, from those willing to take small risks on many investments to those willing to invest larger amounts on mature technologies and projects and industries. Sovereigns and sovereign-backed institutions, development finance institutions, venture capital funds, sustainable impact funds are likely to take the lead in funding newer technologies, riskier projects, or projects with no immediate monetization possibilities. Long-term financing institutions such as pension funds, insurance companies, will play at different ends of the control spectrum. An attractive financial innovation to enable the flow of capital and financing into the sustainability sector will be green InvITs. Green assets which have operating cash flows can be transferred into a green InvIT. With solar sector assets maturing, this could be an important avenue for unlocking capital. Here too, investments by local pension and insurance funds will be important. Infrastructure financing is fundamentally a local currency business, and domestic savings are needed to play an important role in the sector, while benefiting from its long-term stable cash flows as well. A significant amount of foreign capital is keen to invest in India's green transition as well. The IFSCA, the International Financial Services Centers Authority, has championed the creation of policies in attracting foreign capital through GIFT City. Sustainable financing, including products such as green bonds, could be raised and listed at GIFT. Pooling hard currency investments in GIFT City to invest into mainland India will support the large investments needed for the sustainability projects. Sustainability will be an important industry of tomorrow. India has come a long way and has the potential to play a leadership role in many areas of sustainability. We do look forward to a much brighter and greener future, and for India to play a key role in that future.
Thank you very much, sir, for sharing your insights. We regret that Mr. Parameswaran Iyer, CEO Niti Aayog, has unfortunately not been able to join us due to some exigencies. We bring this session to a close here and would request our viewers to join us for the next session with Mr. Tuhin Kanta Pandey, Secretary Deepam, Ministry of Finance, which would begin at 3:15 p.m. today. Thank you. Good afternoon and welcome back to the special session with Mr. Tuhin Kanta Pandey, Secretary, Department of Investment and Public Asset Management, Ministry of Finance. We are honored to have you with us today, sir. We are also joined by Mr. Vijay Chando, Co-Chair of FICCI's National Committee on Capital Markets and MD and CEO of ICICI Securities, and Mr. Shayantan Datta, Partner, Shardul Amarchand Mangaldas and Company. I now request Mr. Chando to introduce our chief guest for the session and also present our green gift of trees to Mr. Pandey. But before I hand over, I would request participants to type in their questions in the chat box. Over to you, Mr. Chando.
Thank you very much. A very good afternoon to all the viewers, ladies and gentlemen, and all the distinguished guests who are here on the panel. Super excited to have a special guest for this session, and I'm sure this is going to be an interesting discussion. Of course, Mr. Tuhin Kanta Pandey needs no introduction. Everyone knows he's the Secretary Department of Public Asset Management, DIPAM, Ministry of Finance. He has held many important positions with the government and Government of India, Government of Orissa, and he's also served in the regional office of the United Nations Industrial Development Organizations. Mr. Pandey has wide exposure in the areas of economy, finance, industrial development, tax administration, and he's been truly instrumental in bringing several policies, innovations into the departments that he has served. Now, coming to his current role and with regards to what he's doing at DIPAM, I personally got an opportunity to work for him, and having seen him at close quarters, I think I would be failing in my job if I do not say a few things about what we've observed while doing work for him. So since the time that he took the role, I think it would be fair to say that some of the easier part of the disinvestment was already done. And when he started off, there was this agenda of the government, which was quite clearly pointing to minimum government and maximum governance. And that agenda had to be driven. And to drive this agenda, we could clearly see some very, very clean, organized thinking and a framework being brought into place along with Niti Aayog. And I must also say that, we have to credit him completely for the kind of conceptualization of the asset monetization program and, putting that in motion. It's completely been spearheaded by him and in such a complex and a unique proposition that has been brought. Also, under his leadership, some of the most notable disinvestments has happened. Everyone is aware of the big one at the Air India, which had certainly grabbed all the headlines. It was a very, very complex disinvestment. It's been in the works for so many years, but it all happened when he got it together. Apart from this, of course, he had put through transactions like NEEPCO, Dairy Hydroelectric Corporation, Kamarajar Port, just to name a few. And if I were to stack up all these transactions, they actually are in the excess of 75,000 rupees that have been netted to the government exchequer. Of course, Secretary has also driven the IPOs of very notable IPOs like the ones that we saw, IRFC, RailTel, and of course, you can't forget the biggest of them all, the LIC IPO, which had happened in very, very difficult circumstances under the backdrop of the Russia-Ukraine conflict. So under tough market conditions, Secretary DIPAM has done a commendable job, and we are excited to have you here, sir. We welcome you for this session. We extend a green gift of trees, which has been planted in your name in Sundarbans in West Bengal. Thank you so much for accepting our invitation, sir. Can we request you, sir, to give your opening address?
Thank you very much, FICCI, for inviting me to this very important CAPM conference 2022. I clearly recall I had last addressed the last CAPM in July last year. And since then, many developments have taken place, and I thought we should, of course, you are largely aware of them, but it will be good to recall. Just to, the context is, just to put it in context, Indian capital markets, they continue to actually strengthen and deepen at a fast pace. Number of demat accounts, as you're aware, they've crossed 100 million, and they're 3 times since 2018-19. During 21-22 alone, there was addition of about 35 million demat accounts. Also, I think LIC IPO also played a role, as several people actually, because of the retail, the policyholders window had opened the demat account as well. And many of them were first-time dematers. The total investments in mutual funds has now gone up 6 times in last 10 years. And retail, HNI, and domestic mutual funds put together, they constitute about more than 17% in the listed companies as of March 31, 2022. So obviously, the listing of companies has been one of the most important objectives of government policy. And it is not only from the point of view of disinvestment receipts, but from the point of view of the transparency that it brings about, the corporate governance, the market orientation that is added to the functioning of the government companies, as well as broadening and deepening capital markets. 17 companies have been listed since 2015, since this government came into power, and this has been more than 50,000 crores has been raised, drawing about 6 million retail investors, creating more than 7 trillion rupees worth of listing market cap, which is about $92 billion. LIC IPO, as you know, May 22 was the largest IPO and could be pulled through with a lot of teamwork. And I at that time commented through, sort of Atmanirbhar Bharat as an example of Atmanirbhar Bharat. There were, huge challenges, the size. This was an organization which predated the regulator itself. It had a separate legislation. There was a capital structure had to be reorganized. Governance system had to be, corporate governance has to be completely overhauled. Embedded value determination had to be done for that. I think the core software itself needed to be changed, and more than 250 million policies had to go through the new grill, the new accounting grill. As you know, that insurance is extremely, sort of number crunching is involved there with the long-term implications of policies and so on. And on top of it, we had twin crises. One was the Ukraine crisis, and the second one was multiple central banks were, looking at the inflation with renewed urgency. And therefore, we knew that we had this huge FPI withdrawal from Indian markets. But again, thanks to the resilience of Indian capital markets, such a largest IPO could be pulled through under those trying circumstances. It was a great example of teamwork and massive upgradation of capital market infrastructure, including technical infrastructure, the way we could deal with, the millions of shareholders without glitches, and the whole payment ecosystem was also reorganized. Additionally, because there's a UPI system now is in place, and millions of probably 30 lakh emails were actually issued in 1 hour of allotment. The allotment process went almost glitchless. So this was also a good testing time for how the capability of our entire ecosystem, because a policyholder window had to be created and all the bidder platforms that had to be bringing in. So a lot of changes had to take place. And, if you say that we had taken a cabinet approval in July 2021, and we could have the IPO in May 2022. So I think there was quite a bit of teamwork, massive amount of work, which LIC officers, their management also did, and so did the merchant bankers, the legal advisors, and so on. Going forward, LIC is taking a number of steps, initiatives. It's an important from the point of view of, is that LIC IPO was the only objective, or are we really looking at? Because as we said, that our thing is a corporate governance transformation. Such a large financial institution had to be brought in at a very mature stage, and obviously we had to have to address these challenges. The management is addressing the post-listing initiatives. For example, re-engineering process to improve the 13-month and 25th month persistency, where LIC has been relatively less than its peers. Then bringing new professionals in the areas, like, for example, investment relations. There's a chief development officer post which has been advertised. There's a chief technical officer post which has been organized. Improving employees' productivity, cash management, looking into the actuarial valuation more in line with industrial practice, and regular IEV disclosures, Indian Embedded Value disclosures. And I think from going forward, the LIC has announced that the September results will be announced. I think along with that H1 IEV will be announced as well. There is also an added important issue of improving non-par mix, so that their portfolio is more rounded, their insurance portfolio is more rounded. Now, I would also like to, in this context of listing and capital management, I would like to also just bring it to attention another important initiative, Bharat Bond ETF, which is nothing to do with disinvestment per se, but has played an important role in the capital market, deepening of bond market, because it was first received in DIPAM and launched in December 2019. And since then, we had 3 tranches already. And significantly, there has been several private bond ETF which have come. And that was actually the objective, that we bring about a product in close cooperation with SEBI, work out sort of model and develop the product ecosystem. And then, of course, there are others who can join in. And I believe several other bond ETFs drawing on state development loans or the corporate bonds, or even GSECs, they have come into being. And the cumulative AUM of bond ETF market has gone up to 63,000 crore, of which 78% is accounted for the Bharat Bond ETF. So this was just what I'm saying is that these are the kind of things actually needed on the bond market. I think a greater amount of activity is required for deepening of bond market. And I'm sure that all the different players, market players, and the regulators are onto it. Let me now briefly come to a very important pillar of our policy, which is the strategic disinvestment. Now, strategic disinvestment, also by way of privatization, is one of the important objectives of, has been one of the important objectives of the government in the new PSC policy, which has been notified in February 2021. The basic objective, and I think this is very important also to understand, is the strategic disinvestment or disinvestment per se is only merely to earn the revenue for the, receipts for the government as a miscellaneous capital receipts for the government, or is it something more important than that? And I think what is important to look at it is the overall objective of the government, where Indian private sector has come of age. You have companies, Indian companies are capable not only in India but to go abroad and manage very complex things, very large projects. So therefore, I think the present context of the economy, when we really want to go for more of capital formation, the growth, and really looking at this decade as India's decade, now we need to really see that what we need to see, we want to unshackle the investment opportunities. And one of the investment opportunities is from the brownfield. If you have a unit and you are able to reach the economic and growth potential and job creation potential of that enterprise, then obviously we tick mark all the boxes. The employees gain, the economy gains, the productivity gains, and overall, the the structural reforms, they put you into a more sustainable and higher rapid growth path that we so much aspire. And these are the examples. If you really see Air India disinvestment, it's not that we have saved, the government has saved 20 crores a day with the taxpayer we're paying without actually looking at having any growth in mind. It was bare survival. And obviously this 20 crores per day would have risen to a much higher number as we go along, because there was no way the organization, it was highly constrained in terms of capital, could have actually used the opportunity that India has to offer. COVID had its problems, but we know that post COVID, the aviation industry is rapidly, growing, and it is to grow on different fronts, not only in terms of means and services, but the engineering, the ground handling, and several other things which are the linkages with the rest of the economy. And that is the billions of dollars of investments and the additional jobs and the better connectivity, because India is a hub, better connectivity with the world, better customer experience. All that will actually add up to growth and jobs in Air India and the general aviation market as well. Because there are several linkages, as I said, direct and indirect linkages of this industry. The second example I would like to give you, the privatization of Neelachal Ispat Nigam Limited, which has fetched bid value of upwards of 1.5 US dollars for a plant which was completely closed for 2 years, where net worth was a minus 3,000 crore, and the workers hadn't been paid for 2 years. They had overdues of 350 crores of employees' dues. Now, all that has changed when the whole thing has been handed over in the month of May. And now, we are not only, the work is on right now as we speak, with probably 4,000 people working day and night to not only bring that plant into the closed plant into operation, but also simultaneously the new plans to make an investment. So in this decade, in maybe next 7-8 years, we are looking at $10 billion of investments in Neelachal. And you can imagine the spin-off which will come, not only as a matter of direct employment, but indirect employment. And potentially, we are looking at Kalinganagar to be one of the probably most cost-effective steel making hub in the world, with 20 million tons, 18 to 20 million tons of capacity at one place. So this is what actually the strategic disinvestment can potentially do if it goes well. So it's not merely, now incidentally in Neelachal Ispat Nigam Limited, government received nothing because it was basically, I think, 6 PSUs which were there. So obviously their problems, I think, have been sorted. They got the reprieve, they got their resources. Disinvestment receipts of the government do not show anything. But this was something where we have, it's like, creating an investment opportunity of $10 billion. This is where I would say that the strategic disinvestment needs to be looked at. Whether it will actually, it will lead to more productivity, more sustainable jobs, more this thing. Then in that case, we need to be more efficient, technologically nimble, take right decisions. All that we believe are more forthcoming in the private sector. So therefore, we should really look at it. Disinvestment is less from the fiscal angle, but more from the angle of reforms that it can bring. Similarly, I'll give you a third example of Paradeep Phosphates, where government has exited completely with about 19% of the share, which we had from 2002 disinvestment. We were retaining a part of equity, and we have released this stake through the IPO. Fortunately, this IPO also went through successfully, and this completely we have exited. So there are many ongoing transactions are there. Very important aspects that we have fairly, because one thing we have to understand is this is coming after 20 years. The strategic disinvestment by way of privatization, we have to learn a number of things because a lot of institutional memory has been lost. Also, the times have changed. So we have to internally increase our capacity building also and do some legal changes. For example, in case of demergers for the government company, it's an important thing because a lot of CPSCs have got land at very, very important places, which is important as a real estate. Now, to bundle it with the operating companies, neither the bidders would be interested because that will be very costly to, and secondly, it's not necessary as well because, you can't really load real estate into operating companies, as you know, that you have to be nimble. So, and their value can be much better discovered if they are demerged, they are separated. And in listed companies, obviously, there are challenges also because it's time take. You have to create another company, and then you have to take. But some of the important points which have been sorted in terms of a stamp duty on demerger, which would have led to a double stamp duty, not only at the point of sale, but also the point of demerger, which would have dissuaded the state governments and the central government entities to actually doing these demergers. So there have been a special dispensation been brought in under the Stamp Act. There has also been a greater amount of clarity under the system across the administrative ministry is that we need to really take up that as a parallel activity so that we can push it faster. So some of the key ongoing transactions have these demergers either done or in advanced stages, and following which I think we would be able to invite financial bid. And so we would proceed with some of these disinvestments there and all that. Now, Idbi Bank is an important thing which cabinet decision has been obtained, and we have been working at it for quite some time. This is also the first of its kind transaction where through a bidding route, we would be, actually privatizing a bank in the real sense. Although called a private bank by the RBI, both the LIC and government put together have about 94% of the equity. So it's always perceived as a public sector bank. But now that the bank has come out of the PCA, is going on, looking up, we have a potential that this could be also the first case of actual bringing in a private partner there. And the expression of interest, we are working at it and will be issued soon. So lastly, I would also like to point out the dividend aspects of our stocks. I mean, we have, as you know, we have more than $350 billion of market cap. We have listed CPSCs as well as the listed banks and insurance companies. It's very important that the minority shareholders are respected. They are brought into the scheme of things of the both government as well as the CPSC management. So PSCs regularly have been rewarding the shareholders through dividend. There is a consistent dividend policy in place. They've been asked to interact regularly with analysts and investors to share obtain feedback from the market. DIPAM itself wishes to keep engaged and safeguard interest of minority shareholders because everyone has to be together, and we have to balance the interest. It's a balance the interest of raising fiscal resources and balancing the interest of minority shareholders, because a fine balance is involved. If you are just too quick and you are just too quick to garner resources from the disinvestments through market sales, obviously you will also create a price overhang, which will not be in the interest of minority shareholders. So I think there is a nuanced approach to disinvestment, which is in best interest of not only the Indian stock market, Indian stock, but also for the PSCs. And that is what we intend to do, and that is what we have been intending to do, we have been doing. And I think the results are also positive. If you really see in 2021, we had the BSC CPSC index as well as the Nifty CPSC index, NSE CPSC index were always, sort of much behind the increase in the main BSC Sensex and Nifty 50. But if you look at 21-22, as against 18.30% increase in BSC Sensex, the BSC CPSC Sensex has increased by 27%. Similarly, if you look at Nifty 50, there was an increase of 18.88% in 21-22 in Nifty 50, but 41% increase in NSE CPSC. And to some extent, that trend is also continuing in the current year 22-23 till date. So the issue is that if we are looking at our corporate governance, consistent dividend, looking at disinvestment in a nuanced way, focusing on privatization transactions where we really get the value for the money in terms of reforms, I think overall we should really not look at disinvestment from merely an angle of plugging fiscal resources as a gap, but as a means of restructuring, as a means of, for example, listing, as we said, that while they remain government companies, they change quite a lot from being an unlisted to a listed space. So this is a continuum, this is a journey. And in that journey, we should really we should keep adding value for shareholders, both while they are in the government, also when we bring in through listing and disinvestment, the other shareholders. And finally, when we actually hand over management control to some of the private in M&A transactions that we do it through a completely transparent and open bidding process. There are constraints to that process, as you are aware, because when you do it for a listed company, there is a great deal of due diligence process involved. Nobody takes management control of a company without going through you have to go through a fine comb into all aspects of that company. It may be a time taking. It's time taking also for the private M&A transactions, but definitely it is in the long term is a much better way of raising value, and from the economy point of view of bringing in the efficiencies and productivity and the job growth that we so much aspire for. So that's I think I'll end it here, and maybe I think some of it I can answer in the questions. Thank you.
Wow, wonderful. Thank you so much, sir. I think some of the examples you elaborated were quite fascinating. And the perspective that you gave with respect to this reform benefiting divestment as a lens to look at is indeed quite fresh and a new lens. Also loved some of the examples you gave on the strategic stories that you were explaining. Sir, there is one question which has come with respect to actually the famous Air India transaction. You explained, the benefits that are flowing. I think a question is seeking to know that would you like to share any learnings that emerged from the manner in which the Air India transaction got done, and whether those learnings can be replicated in some other cases?
I think it was Air India case was a classic case of learning by doing and also learning by listening. And I think in many sense, our transaction advisors and other advisors are also learning a little bit way, because everyone learns through actually doing things. You may start with a certain document, you may start with this, but you have to really customize things and go actually depth of the issue. In case of Air India, I think our crucial thing was that, we were initially, we were starting on a priority. We knew that the debt was extremely high. And this debt was not actually backed by the assets. This debt was basically, funding of losses. In the normal sense, those losses are always funded through equity. No lender actually will give you money to fund losses. I mean, it will expect the shareholders to bring its own resources. But because government had given guarantees at the time, I think Air India continuously went into loans which were guaranteed by the government. So in a way, backstopping by the government. And so therefore debt was looking very, very high, but actually there was no underlying, because if you continuously make losses for 10 years, so you can imagine, this all is a phony kind of a debt. But since it's government guaranteed, that has got to be paid. So how much of debt is sustainable and not? And so therefore, the enterprise value concept that we brought in for the first time is to, bid out, equity and debt put together. And then we carve out the thing. The SPV carving out, the flexibility with which will be needed to do that. And there were very complex issues were involved till the last end in case of Air India. But I think, and I think tremendous amount of data had to be produced, third-party data also, regarding the quality of the assets, regarding, because as I said, that everyone will go through it. They will go through the tooth comb as to, what is going to be in for me there. So I believe, and then employees and other things. So the basic learning has been, one is that, in the interministerial processes that we have designed, in which there has been a great deal of teamwork. And I think teamwork is what we have been able to establish. And if I can give a credit to, the success of this, I would say the pragmatic teamwork. A pragmatic teamwork, if we are able to learn, then we have to, because we have to customize. Every transaction is different. You can have some templates, but if we really go for the very standardized templates, we will get stuck. And important thing is that there has to be bidder interest, and bidder interest has to come also with the experience of the bidders. If we are able to successfully, execute certain transactions with bidders' experience of, of high order, that means, there has been transparency, level playing field, adequate sharing of information, and so on. Then, the confidence builds up in the system that more bidders then come forward, more quality bidders come forward for that. Because the fact is that it is not a fire sale, contrary to what the perception, some people would like to say. It's a very, very robust processes. We have an interministerial. We have to look at every aspect. We know that government is aware that these are public assets. So this is not every organization, every institution will scrutinize it. There will be court scrutiny. Invariably, there will be court cases. In every case, there have been multiple court cases also. Again, there also our pragmatic teamwork has helped in our being able to convince the courts that what we are doing is in the best public interest.
Indeed, flexibility, practicality, agility, and giving confidence. I think these are some of the key takeaways. While hearing you, sir, I'm reminded of some of the ways in which new age organizations function. It's called an agile setup. It looks like the government is having this interministerial and interdepartmental agility loop playing out pretty well, and that augurs very well for things going forward as well. So there is another question which has come out, and this is with respect to I think the examples you were giving, where there is a high value real estate asset sitting in operating company which may not be the best place, and therefore looking at separating it out and monetizing. So any thoughts on timeframes in which this asset monetization program should get going meaningfully, and also any targets that you have in mind?
Well, I think for the sake, let me say that there are two kinds of asset monetization. Asset monetization is generic term which involves the whole continuum of how we will be able to bring in private sector in whatever form. So you could have, I mean, you could have a standard greenfield PPP, or you can have a brownfield PPP. And I said brownfield PPP is actually what we call it core asset monetization or asset recycling. What we have is that, either you can have a securitization, or you can have an, TOT kind of a bid, or you can have an InvIT or a REIT, which you can, sell the units, or you can have a PPP project like airport modernization, airport thing, where people come in for management of O&M as well as for capital investment for long concessions. So that there are concessions of different kinds. Now, or there could be an MDO model. I mean, you could have it in mines, for example, an MDO model, which is actually going very successfully. In fact, for the asset monetization, one of the biggest successes has been on the mine front, where there has been, one is liberalization of a policy, where private sector has been brought in through auctions and so on. And secondly, even the public sector has also been involved, instead of every time, trying to have their own personnel and capital, trying to bring in the thing operation through an MDO approach. And we had close to about 97,000 crore, which is about $12 billion as asset monetization, which was achieved last year. And this was in different forms. It could be an InvIT, it could be, for example, NHAI has gone for multiple InvITs, Power Grid has gone for InvITs, and now, there has been a monetization of in some of the FCI silos, etc., is coming in. So these are of different kinds. And MDO is also one of them, where I think the largest success took. This is the core asset monetization, where actually the assets are being used in all that. In the non-core asset monetization is basically a simple, what we used to call it, you have a land and building which are in surplus, and therefore, what do you do it for? You got to be really parting with that. Now, how do you part with that? It could be simple auction, or it could be a developer model, or it could be again a REIT. If you have something, you can go for rentals and you can collect it. But certainly the job which can be done by a specialized real estate is different from what an operating company would do, because otherwise it will add on to the valuation, and then the whole even the main deals will become in operation. Now, for example, in case of BEML, where the delisting has taken place and BEML land asset holding has been created, there's about 124 acres of land, which is a freehold, which is monetizable in Bengaluru city. You can imagine, if you have 124 acres of land, then it can be put to different usages, and then it could be separately monetized. So now this particular thing is trying to, similarly, you have, for example, in case of Air India, several of the Air India's thing, the building, the land, etc., are being actually handled through the SPV route and through the AIAHL, which will be there. And in order to expedite even this, we have also felt that there is a deficiency in organizational capability to do these deals in the government of India. Unlike state governments, where we have normally land-related organizations, there in the central government, there is no such thing which is a pan-India, which can look at it pan-India, these kind of a thing. So therefore, the idea of National Land Monetization Corporation has also been there. Cabinet has given an approval, and now Department of Public Enterprises is putting it, bringing in. They will be recruiting people and they will be setting it up, so that these are specialized people who could then able to actually fast forward the several lands which are there with either the closed union, organization CPSC, or the units under closure, or even for that matter, some of these land assets that we are hiving off now today, there this organization can also help out in monetizing it. So this is the non-core land monetization that we talk about.
Sure.
The core is completely different, where the core means that
Ongoing.
power grid, the lines and the roads, etc. being used, and only you are making upfronting the payment and upfronting the payment in order to push your capex. There again, the money doesn't come into the fiscal receipts. It basically goes on to increase the capex, which is one of the main important objectives of this budget, is how to increase the capex in order to have a long term.
Thank you, sir. Indeed, ongoing effort, clearly. There are 3-4 more questions, but I'm going to use my keeping the time in mind. Maybe just slip in one last question, and then Sayatan, you could do the conclusion. There is a question on IDBI Bank. So there is the privatization of IDBI Bank is advancing steadily. Do you believe once this is completed, there would be more action with respect to privatization of public sector banks, or would there be silence on the banking front thereafter?
Well, I think the Department of Financial Services is on that matter, is seized of the matter, but the crux of the thing is doing. And unless and until we are able to do things, we can have a very big plate and still we will not be able to do. So the point is, it's very important that the transactions get completed, and particularly which is the ongoing. Learnings are imbibed, models are developed, and benefits are demonstrated. Now, these are the things which we are seeing, for example, in Air India.
Correct.
I think that we are seeing that many of those apprehensions which the people had, that this will destroy the employees at this and on the contrary, there have been more job hirings there. So I mean, point is that we need to have a narrative where it is an issue is that are we really, it's not, disinvestment is not anti-job, disinvestment is not anti-employee, disinvestment is not anti-public interest. All what it says is that, well, some of the things, if you are capable of handling, you handle. Now, there is no point the government's handling everything. If you really see tomorrow, you can stretch it and say, okay, the food on the table must be also brought in by the government, produced by the government. Well, this is not the, I mean, we have to create the tremendous amount of opportunity for the people to produce goods and services and exchange them. And that is how whole the modern economy functions. So it is not, in my opinion, is really the job of the government to be producing things and selling them and things like that, because there are sovereign functions of the government, and there is a huge, important things where markets are not functioning in terms of rural growth, in terms of investments, in terms of social infrastructure, in terms of even physical infrastructure. So there are a whole lot of things which the government regulation, sovereign functions. So it is basically saying that are we able to continuously, review our niche areas which we should be able to come in or remain or this. And in this policy also the government has said that we will retain certain in certain minimum enterprises, minimum number of enterprises in some of the strategic sectors. So even that thing is there. So it is, in my opinion, it is a calibrated, gradual approach and demonstrating, learning, and going forward. But within the overall policy framework of the government.
Thank you very much, sir. It's been truly very insightful hearing your presentation. Sayantan, I'd request you to now.
Thank you, Vijay. Thank you, Mr. Panda. It's truly fascinating to hear from you and the brightest mind which have been behind all the path-breaking divestment that has happened in last couple of years. I have been, of course, working with the DoD and DPAM for last 16, 17 years. I've been there since the Oil India IPO and even before that. And I'm very happy to tell this is the brightest DPAM team I've ever seen. The kind of things you have pulled off in last 2 years, we could never believe they can happen. The Air India sale was something we always thought it's required, but we never knew it can happen. the LIC IPO, and I remember when you were attending the listing ceremony in the BSE hall, and you said that the LIC's head office is just 5 minutes away from BSE's office, but it took us 65 years to come here. And there's a huge reason for that, because it was one of the toughest IPO ever. And I know the amount of changes in the legislations, in the regulations that you have to go through, and that was done by interministerial coordination, and those were made in place, and then the IPO happened. So I know all of them and what has been pulled through, and also what Jan Dhan Yojana did to the bank accounts, LIC IPO did to the Demat accounts. Of course, you don't want the Demat accounts to reach out to so many people like Jan Dhan Yojana has. Of course, you want the risk appetite to remain to the people who can afford it. But at the same time, the base of the capital market has been made so broad thanks to the LIC IPO that now every IPO can come out even without the FII investment. The resilience of the Indian capital markets through the retail investment has come through. So thank you for doing this transaction, sir, and thank you for showing us what divestment can achieve for India. Couple of things I wanted to highlight to you, sir, because it's not every day that I get to have this chat with you. We have, of course, like the mandate of DPAM is different from DOD, and it's not only focused on the divestment. So whenever, as you also pointed out, that when you don't want to divest, when you want to remain invested, maybe a few more strategic calls that you can think about. I can throw some ideas here. Like when 2008 Reliance Power IPO happened and the share price really went down after that, what Reliance did was they came out with a bonus issue where the promoters decided to waive up their right to get the bonus issue, and the bonus shares went to the public investors. We saw LIC IPO happen because of huge motivational investment and done by the retail investors as well. So such kind of strategic thinking can only be done when DPAM is being headed by you. You have shown such strategic thinking before, like 2021, the first time a government IPO took the anchor investor subscription route, and it has never been taken before. Every DPAM team and government was a bit scared of taking a discretional view because anchor subscription, of course, had the discretional point, the nature of it. So I have seen you taking such really tough decisions and come out with it so successfully. So that would be the one thing, sir, that if you could look at the strategic calls that could be taken, even when the investment is going to be there and not just a divestment point of view. And as a lawyer, I had to make one point, sir. The model agreements which are there on the DPAM website, they have been since 2010. It's time to redo them, sir. I mean, the Companies Act has changed, the ICDR has changed. So we'd love to work with you and get those done. Probably at every 5 years, you should look at those model agreements and revive them to make it in line with the updated regulations. But with that, thank you very much for the session, sir, and thank you for the fascinating thoughts and the behind the scene the activities that we never get to know. Thank you so much, sir. And thank you, Vijay, for spearheading this session.
Thank you once again, everyone. Good day to all.
Thank you very much, sir. Thank you, everyone. I would just like to make one announcement for the viewers that we would start the next session at 4:15 p.m. So I would request you to join us back at 4:15. Thank you.
So we are done. Chiku?
Good evening. I welcome you to the special session with Dr. Saurabh Garg, Chief Executive Officer of Unique Identification Authority of India. We are truly honored to have Dr. Saurabh Garg with us today. We are also joined by Mr. Sunil Sanghai, Chairman, FICCI National Committee on Capital Markets and CEO, Nova One Capital, and Mr. Vijay Chandok, Co-Chair, FICCI National Committee on Capital Markets and MD and CEO of ICICI Securities. I now request Mr. Sanghai to introduce our chief guest for the session and also present our green gift of trees to Dr. Garg.
Thank you, Abha. Ladies and gentlemen, welcome back to yet another very interesting discussion at CAPM 2022. We are delighted to welcome Dr. Saurabh Garg, CEO of UIDAI, which is popularly known as Aadhaar, a household name for all of us. Dr. Saurabh Garg is an IAS officer serving as Secretary to the Government of India. More importantly, he has a PhD in International Economics from the Johns Hopkins University, an MBA from IIM Ahmedabad, and a BTech from IIT Delhi. I'm sure you would agree with me that this is a rare combination, and we feel he is one of us. Dr. Garg is also a friend of capital markets because he has done several things for the capital market. During his tenure at Department of Economic Affairs, he has been instrumental in setting up a very prestigious institution called NIIF. He has also worked on transformation of FDI policy for the Government of India, and not to miss his significant contribution in working on multiple schemes related to monetization of gold. And I have witnessed that myself at that point of time. Dr. Garg is currently also involved in some interesting projects such as digitization of agriculture and direct income transfer scheme of farmers. Ladies and gentlemen, you would agree with me that with the talented people like Dr. Garg, we are in safe hands. Dr. Garg is a very warm welcome to CAPM 2022.
Thank you. Thank you. A pleasure to be here with you and your team today.
Before I move ahead, we would like to honor Dr. Garg, as Abha mentioned, with a green certificate. Dr. Garg, FICCI will plant trees on your behalf.
Thank you. Thank you. Couldn't have been a better way of giving a gift.
Dr. Garg, you are not new to CAPM. You have been blessing us in previous occasions also. This time at the CAPM, we have launched a new initiative. We have launched a RegTech initiative, which will enable our listed corporate members to work on their capital market related compliances more effectively and at lower cost. The Honorable Chairperson SEBI launched this initiative yesterday. As you well know, that this is a flagship capital markets conference hosted by FICCI. The flow of the program, Dr. Garg, is that we will request you to address us. Post that, we do have few questions we have gathered in advance, and my colleague from FICCI, Vijay Chandok, would interact with you, and we will have some questions for you after your address. Ladies and gentlemen, Dr. Saurabh Garg.
Thank you. Thank you, Sunil. Thank you, Vijay. Thanks to FICCI. It's a pleasure to be here today. And maybe I'll just speak a few words on some of our recent activities and some of the plans that we have, and would be happy to discuss them further as we move along. Just to take stock, we have reached a point where nearly 100% of adults in India who are resident in India now have an Aadhaar. And that means in itself that we can plan for programs and schemes which have a universal coverage and which can ride on the Aadhaar digital infrastructure. And that is precisely what a number of programs like the DBT schemes, the direct benefit transfer schemes of the government are doing. Some of the recent ones which were launched in the last few years include PM Kisan, wherein around 11 to 12 crores farmers are regularly being sent funds to their Aadhaar enabled bank accounts through the Aadhaar payment bridge, which is reducing leakage of funds, ensuring better targeting, a deduplication so that the same person doesn't get twice, and removal of those beneficiaries. I mean, these are all benefits which the digital rails of Aadhaar are providing to the different government programs. Subsidy which goes directly to LPG users. And there are a host of programs, in fact, 1,000-odd programs of the state governments and the central government use this. And all the kind of benefits, even if you just look at the 4 or 5 sectors, the benefits that have accrued in terms of savings because of the factors which I mentioned earlier, is more than 2 lakh crores that have accrued through the government, both state or central, depending on whose scheme it is. And this is where we are looking now to expand in the usage. And our objective is, the vision going forward is how Aadhaar can help in the ease of living for residents. So while on the government side, we already have 1,000-odd schemes, we are working with state governments and the central government to look at that all beneficiary-oriented schemes, or even going to a group of beneficiaries, for example, a family or a self-help group, how those benefits can be right on the Aadhaar digital platform so as to accrue the benefits of deduplication, those beneficiaries, direct transfer to prevent leakage, and etc. What is equally important is that we have enabled in the last 1 year a couple of initiatives which would be of active interest to the corporate sector. And one of them is the offline verification services. A lot of the agencies are unable to become authentication agencies because of the Aadhaar Act, which is much more focused on transfer of benefits and services and subsidies from the government or the state governments. But the offline verification is a nature of a direct relationship between the resident and the corporate who is performing that particular function. And this voluntary usage of Aadhaar is what we have enabled, and which will empower the residents to use Aadhaar based on where they feel it will help them to access that particular service which a corporate sector client is giving them. So this offline verification is something, there are various modes. You can use the QR code, you can use the file which can be downloaded by the resident and shared with the corporate to do then eKYC and also to onboard their client. So this is the area where we're increasing our outreach, increasing our awareness functions, so that the corporate sector can use this service for eKYC activities that they do directly without the intervention of UIDAI. And already the QR code which exists on the Aadhaar card, that can be read by a QR code reader. And that also helps to ensure that even if some photoshopped cards have been done or some name or photograph has been changed, that can be verified with the QR code. In fact, next week, we'll be unveiling some further activities in this in the upcoming Global FinTech Fest, where we hope that such kind of activities in terms of working for the corporate sector and between the resident and with the consent of the resident that will further help in the ease of living. At the same time, I would like to mention that nearly 155 SEBI regulated entities have been notified for authentication services over the past few months. We've been working with the Department of Revenue on streamlining this activity, and 155 NBFCs and other entities have been notified, and nearly 100 odd also entities which are regulated by RBI, they have been notified. So the number of authentication user agencies would really nearly double or more than double with this, because we have somewhere around 200 odd authentication agencies which are registered with us. And with the onboarding of these NBFCs, this will add another around 300 more entities. So I think a lot more activity and a lot more entities would be able to do the eKYC, even through the online mechanism, the offline one I just mentioned in any case. But looking forward, where I think really the growth will lie is the fact that, as I mentioned, we are still talking of 200 or 300 entities, but we have more than 9,000 NBFCs who are regulated by SEBI, regulated by RBI, or working with PFRDA, IRDA. And I think that's the real opportunity going forward, that how each of one of those agencies can utilize the strength of Aadhaar for doing the eKYC using the Aadhaar platform. In fact, recently I was talking to a credit back-end agency who works for credit with a lot of with a number of front-end banks, etc. And they were saying that the failure rates or authentication impersonation rates pre-Aadhaar, which were maybe 1.5 or 2%, post-Aadhaar are less than 0.1%. So the kind of possibilities of any fraud happening has reduced to this extent, and we would be very happy to work with different agencies. Obviously, they need to be regulated agencies of SEBI or RBI, and see how Aadhaar can be used to ensure that the ease of living that we talk of, and credit being a major bugbear for a lot of people vulnerable at the bottom of the pyramid, how we can ensure that Aadhaar eKYC services onboarding using Aadhaar can be used. And before I hand over to Sunil and Vijay back, I would just like to mention the fact that we also started the face authentication. We already had different modes of authentication, whether it was fingerprint, whether it was iris, whether it was OTP based through the mobile, and even demographic authentication as one level slightly lower than this. But face authentication has also been started. And this was especially useful during COVID time, when a lot of people wanted a touchless method for authentication. And that's why we introduced last year in October, about a year back, the face authentication, which was especially useful for a lot of the senior citizens who were unable to go out, and in the pensions, for example, that has helped. So we would be looking forward to further streamlining these activities. And there have been various studies done of what is the benefit of having a legal identity. And I can just mention two facts on this. One, that the UN Sustainable Development Goals, which were announced in 2015-16, have as one of the targets, target 16.9, that a legal identity for all by 2030. And India has been one of the few countries to have already achieved that universalization of digital identity for all, and which is not just a legal identity, it is a digital legal identity, which makes it so much more useful. And the second thing is a study which has been done, which has been quoted in by the World Bank, McKinsey, and other agencies, is the fact that having a legal identity or digital identity adds anything between 3 to 13% to the GDP. And I think that's significant gains that happen. And the way we can use the digital infrastructure, the digital rails, to ensure that 100% of the residents who already have Aadhaar, how it can be used much more fruitfully to ensure that the different services that are given by the government and the corporate can reach them so much more effectively and efficiently is something that we would be happy to work with all of you. Thank you. I would stop here at this time.
Thank you very much, Dr. Saab. I'm supremely excited hearing all the various applications and use cases you described. Let me add to a very interesting use case from a capital markets perspective, which Aadhaar has enabled. In the last just 18 months, we have seen an influx of close to 5 crore Indians entering the capital markets. All of them with aspirations of harnessing the potential of this great country. And I must say, if you were to look at what happened in the last 18 months and compare it with the last, since capital markets perhaps started, the last 18 months was equal to what happened from the beginning. And all this thanks to Aadhaar, because it in a way democratized access. So I think some great work is happening. But in the course of our working, one of the things that keeps coming up, Dr. Saab, is that people sometimes, particularly in the world of digital today, worry about data privacy, data security. So would you like to throw some light on how Aadhaar is dealing with this issue?
Yeah, I'm so happy that you brought this topic up. And I can just add, before I talk on the data privacy and security part, I can just add that we do about nearly 8 crore authentications a day. Every day, 8 crore times someone is using Aadhaar somewhere. And that includes obviously for eKYC, etc. So we are totally geared up to ensure that the benefits of digitization reach the most vulnerable and the most remote regions of the country. I think coming to data security, information security, that is something which is paramount in all that we do. In fact, that permeates every activity, and there is nothing that we don't do without having it vetted both internally for data security and information security and by third-party agencies. In fact, all our ecosystem partners, they are audited on a regular basis for privacy issues, for information security. And we don't allow any partner who does not meet our infrastructure requirements to be onboarded. We have multiple firewalls that we have, both using software and hardware. We use encryption at source, at motion, so that any data which travels in our system, even by chance if it gets, someone is able to get it, they will not be able to make use of it because it is encrypted to the highest standards. And we meet the highest levels of privacy that are set out. The Supreme Court has set out very clear guidelines. Our Act is very clear on what we can do and what we cannot do. And we continually are being audited by different agencies. So, and we obviously get inputs also from various agencies on possible information security attempts that are being made. So this is something I can just mention that we maintain the highest standards. And I can very proudly also say that it would not be wrong to say that we are among the best, if not the best, globally on this count.
Indeed, I think the world is truly proud of the achievements that you have put on the table. And the world is actually looking at us. I don't know if there are any thoughts of Aadhaar concept getting sort of exported. Is there any work happening in that space? Would you like to share something there?
Yeah, absolutely. I mean, there's a lot of interest from a number of countries on using the Aadhaar architecture. As I mentioned earlier, with the fact that the United Nations Sustainable Development Goals making it one of the SDGs to be met by 2030, the focus is so much more on a lot of these countries coming forward on a on a regular basis. We have various delegations from different countries coming in, visiting us, and discussing how we have done it, how we have implemented it. And it's important to realize that it's not only technology that runs Aadhaar, it's an entire ecosystem where we are able to reach 130 crore people on a very frequent basis, whether it's for enrollment or updates. And that this technology, that this system, the processes have to work across the system in an offline mode, in an online mode, in remote areas, in hilly areas, etc. So while technology, no doubt, is the backbone, I think it's a lot more than just technology. And that is what a lot of the countries want to understand, because that's the kind of challenges that many of them face. In fact, some countries have already adopted the architecture with the support of our ecosystem partners who have been working with us and who have over the past decade or so gained that knowledge. And we ourselves are actively looking at how we can also work on digital identity standards which are global in nature. Given the fact that 1/6 of the globe has the digital identity which Aadhaar has set out, we are very well placed to work with other partners to look at the identity standards so that the kind of frugal and the kind of simple methods that have been used, which can work with people who are not very technology savvy, and yet the system can perform, are some things that we are working with other countries. And the kind of interest that there is, we are sure that a lot of our ecosystem partners would also be reaching out to other countries and working, and while we provide the back-end support to them going forward.
No, Dr. Garg, this is absolutely brilliant. In fact, we always used to say global standard. Actually, this is an Indian standard which will travel globally, and globally people will say Indian standard. One point, Dr. Garg, you talked about growth. We are all preparing for 100 years of our independence. It's Amrit Kal. And we at FICCI also, we set up a small group to understand various sectors what's going to happen by 2047, and capital market is one of the sector where we want to envisage capital market in 2047. There is still a work in progress, but some of the key findings which I can share with you, and that has correlation with growth and therefore the connectivity with Aadhaar. So the way we see our market cap could be as high as $50 trillion. Broadly, the economy would be around $25 trillion by 2047, and the 2 times of economy, that's the benchmark globally, and therefore $50 trillion. The second number is more interesting. Vijay talked about additional 5 crores, so total 8 crores approximately invested right now in the capital market. We expect it to go up to 80, from 8 to 80, 10-fold increase in the next 25 years. Which is almost like 50% of the population at that point of time. The third, I will just pick up one of the asset class or the stream of the capital market, let's say mutual fund. So the mutual fund could be as high as almost $25 trillion. So these are big numbers. Now, how is Aadhaar gearing up to handle this kind of volume? You think the infrastructure, the support is there to handle this kind of volume?
So let me just add on to some of the numbers that you mentioned. Right now, we have a population of somewhere around 135 crores or 1.35 billion. And that's the number of Aadhaar. We have 133 crores Aadhaars, 134 we have issued. And it's only in the 0 to 5 year age group where there's a gap. Otherwise, as I mentioned, we are at 100% Aadhaar penetration for all adults above the age of 18. Along with this number, let me just state a couple of other. The number of bank accounts in the country is more than 140. I'm told it's closer to 150 crore now. Obviously, they're not unique bank accounts. And if you look at the number of telephone connections, it's somewhere around 120 crore, or even now it's increasing more. And out of that, somewhere around 70 to 80 crore are smartphones. That's the number. And if you look at the number of PAN cards, that's in the range of 40 to 50 crore. Depending on that, there might be some which are not unique. So that it might be the actual number of PAN cards may be 50 crore, unique maybe closer to 40. The exact numbers would be obviously available. I'm just giving broad numbers. And I was just reading a couple of days back that we have reached 10 crore demat accounts. For the first time, we have crossed 10 crore demat accounts. Obviously, the unique would be closer to what you mentioned, somewhere around 8 crores, etc. So even if you just look at the capital markets and the banking, so the banking industry is talking of 140, 150 crore accounts. The telecom industry is somewhere around 120 crore or more. And you have PAN cards, which is around 40 to 50 crores. So that's the kind of universe that we are talking about. And I think that's where the growth will happen. And no doubt, saving instruments are extremely limited. Traditionally, it has been real estate and gold. And it's the stock markets which are really coming up now. And of course, the banking sector gave some amount of saving instruments. So I think going forward, the growth will really happen in the capital markets. And as I mentioned, we are already at 8 crore authentications a day. And our objective is to stay ahead of the curve. We are doubling our capacity, which is somewhere around 12 crore authentications a day. In the next year or two, we'll have doubled it. So we are expecting growth because of all the activities that we've mentioned, or the number of entities and offline verification. So not only will there be a growth in our infrastructure, which directly pings into our system, but we are also expanding the ability for authentications and verifications to happen, which can happen at the client end without pinging our system, so that there are alternatives available and the growth can be really exponential. And I think digitization is something which has been talked about by a number of economic, even the IMF has been stressing on that. And I think we are well placed, given the Aadhaar stack and the India stack applications, the host of them that are working. And I'm sure our systems, we are aware of what needs to be done, at least on the Aadhaar side. And I'm sure each of the other partners are also working along that.
I have one question which has always been intriguing me. I think we've had great use cases. We've really expanded the market thanks to Aadhaar. One very fertile segment of contributing to the economy could be the non-resident Indian community. And this segment has a great penchant for investing in the country. While I still feel that, are there any thoughts where Aadhaar can be extended in a slightly different manner, so that greater penetration can happen, greater use can happen? Because I don't think we're fully harnessing the potential of NRI through this medium. Any thoughts around that?
Yes. In fact, interestingly, about 2 years, or in fact now 3 years back in 2019, the Aadhaar Act was amended to enable NRIs also to apply for Aadhaar, even without the residency requirement of being a resident in India for at least 182 days. So if they are Indian citizens and they are living abroad, they still have the Indian passports, then that residency requirement really is required, and they can apply for Aadhaar. But perhaps what you are alluding to is being able to use their Aadhaar outside the country or apply for, etc. So as of now, obviously, Aadhaar, which was the original objective, it was meant to be used within the country, for the residents, etc. But I'm sure as other countries develop their legal identities, as the Aadhaar architecture that we hope that other countries will be very happy to share with them, whether some kind of protocols can be worked out which would help. So these are things which are still in the realm of hypothesis. So I really won't want to comment on it. But I'm sure that going forward, increasingly systems will talk to each other, talk of different countries, and maybe solutions will come out at that stage.
Okay. Before Vijay turns to a vote of thanks, just one, we are a banker, Dr. Garg, and eventually we always smell and look for an opportunity for business. You are sitting on a massive, massive data bank with all the protections and the safety of the data and with the permission. I think there's a case to monetize your data, and it could be a good commercial case to monetize in some form or the other. Capital market always will be very, very supportive to you, if you think so.
I'm not too sure. I think this is personal data of individuals. It's the biometrics and the demographic data. And I think the Act is very clear that this is identity information which we cannot share without the consent of the resident. So with the consent of the resident, obviously a lot of things are possible. But I don't think we have reached that stage where we can think of monetizing this data. The individual themselves, they are free to utilize this in any form that they would like to do so. But I'm not too sure whether it would be appropriate for an agency or an authority which in a way holds this data as a trustee on their behalf. And I would stop at that for the moment.
Well, thank you very much, Dr. Garg, for taking time and talking to us today, sharing your thoughts. Indeed, I must reiterate that we are truly very proud of what you've achieved and offered to this country. Actually, when UADI was set up, I think there were enough skeptics on how this is going to work, how successful this is going to be. I think all of them have been proven wrong, and I think we can clearly see how such wide use cases have been created today. As you pointed out, more than about 100% of the total adults are having their Aadhaar. Several countries are looking to us for what they can take away from us, and hopefully we will see some export of Aadhaar, so to speak, could just be a reality in future. And what is also, I think, noteworthy is the low cost that this whole setup really entails. And you pointed out that more than 300 government welfare schemes are linked to Aadhaar, and the use cases are only increasing. As per a recent report, we were going through that digital dividend, the Aadhaar digital ID serving approximately 1 billion a year is actually is the kind of reduction in leakages. And you pointed out staggering number of the leakage prevention that would happen at full potential. You also highlighted to us about the comfort that you've given with respect to cyber risk, cyber security, and with so much learning behind this, I think we look forward to all the various use cases that are excited to see the lineup of the use cases which are in the pipeline for getting rolled out. So finally, just wanted to extend a heartfelt thanks to you, sir, for taking time and making yourself available for this session.
Thank you. Thank you. It's been a pleasure. Thank you very much.
Thank you, sir. Thank you.
Good day.
Thank you very much to our esteemed panel of speakers. I would request our viewers to note that the last and closing session of CAPM would start at 5 p.m. today, and I would request you to stay tuned with us. Thank you. Good evening and welcome back to the closing session with Dr. Ajay Bhushan Pandey, Chairman, National Financial Reporting Authority, NFRA. It's a privilege to have you with us today, sir. We are also joined by Mr. Sunil Sanghai, Chairman, FICCI's National Committee on Capital Markets and CEO, Nova One Capital, and Mr. Prafulla Chhajar, Past President, ICAI. I now request Mr. Sanghai to introduce our chief guest for the session and also present our green gift of trees to Dr. Pandey. Before I hand over to you, I would request the participants to type in their questions in the chat box. Over to you, sir.
Thank you, Chiku. Ladies and gentlemen, welcome back to yet another very interesting discussion at CAPM 2022. We are delighted to welcome Dr. Ajay Bhushan Pandey, current Chairman of National Financial Reporting Authority, NFRA. Dr. Pandey is an IAS officer, served in multiple capacity at the Government of India. He has a PhD in computer science from the University of Minnesota. He is also a BTech from IIT Kanpur. I'm sure you would agree with me that this is a rare combination to find in government. I'm told he is the only IAS officer who has a PhD in computer science. Dr. Pandey is also a friend of capital markets because during his tenure as Union Finance Secretary, he worked on 3 very important union budgets for year 2019 and 20 and 21. He is known for bringing fundamental reforms in tax collection by introducing faceless assessment and faceless appeals, and also worked on the automated refunds. This was only possible because of his deep knowledge and appreciation of use of technology. Prior to that, as a chairman of GSTN, he established the newly introduced GST in India within a very short period of time of 3 years. Before that, as a CEO of UID, which is popularly known as Aadhaar, he expanded the reach of Aadhaar to almost every individual in the country, 120 billion people in India. And now Dr. Pandey is currently serving as the chairman of NFRA. Ladies and gentlemen, you would agree with me that with the talented people like Dr. Pandey, we are in the safe hands. Dr. Pandey, a very warm welcome to CAPM 2022. Thank you. Before I move ahead, I would like to honor Dr. Pandey with a green certificate. Sir, FICCI will plant trees on your behalf.
Oh, wonderful.
Dr. Pandey, you are not new to CAPM. This is the flagship capital markets conference in India. Highlight of this year's conference is that we have launched a RegTech initiative which will enable our listed corporates to work on their capital market related compliances more efficiently and at the lower cost. The Honorable Chairperson SEBI has launched this initiative yesterday. Dr. Pandey, with this background, may I now request you to address us? And the flow of the event would be is that post your address, we are going to do an interaction and raise some questions and thoughts. We have gathered some questions in advance, and my co-panelist, Mr. Prafulla Chhajar, is former president of Institute of Chartered Accountants of India. He also would like to interact with you. May I request Dr. Pandey for your address?
Thank you, Sunil. I'm extremely thankful to FICCI for having invited me for their 19th annual capital market conference and asking me to speak on this subject. Today, when we look at the Indian scenario in global context, I find that the role of NFRA, because I'm going to talk about this how this whole system of independent regulation, particularly in the accounting and auditing, would play a major role in the the Indian growth story. So this is what I'm going to talk about. So if you see India in a global context, just see what all has been done during the last 5-6 years. I mean, we have witnessed many path-breaking reforms, and I will categorize them into 4 categories. One is the digital reforms. The digital reforms, starts with Aadhaar. This whole program was launched in 2009-10 and under the leadership of Nandan Nilekani. And then finally, the whole system was established. We got a new setup, new legal framework. There were a lot of disputes. And then finally, all those disputes got settled about the privacy, about the data security. All those apprehensions were there in the people's mind. Finally, we got Aadhaar. Now today, we can tell everyone, and as an Indian, we all should be very proud that each and every person of our entire 140 crore population today has an Aadhaar. Broadly, I mean, except the newly born, the people, the children, they get enrolled. That's a continuous process. But we can safely say that most of the people in our country have a digital identity. Digital identity, biometric identity, which is non-duplicable. It is very hard for one person to get to identity. And another very important thing was this identity is not like the identity you can carry in your pocket and like a card. And you can establish your identity digitally online from anywhere, through your biometric, through your OTP, all those things are possible. Why I'm saying this is because this is the fundamental, and that is why it is called Aadhaar, because that has led to many other reforms in our country. And then along with this, the whole telecom, the total connection, the mobile phone connections, and then the smartphones, that is the telecom, the revolution which came in. Then the financial inclusion, the people, the bank account, the access to banking, because unless until those 3 things are there, today when we are talking about this capital market, how do people participate in the capital market? Through these means today. So that's why I'm trying to recount that what all has been done. So this, the financial inclusion, and then over and above that, the UPI today. I mean, you can see the UPI, the way it has grown. The last month, more than 10 lakh crores have been transacted. More than 5 billion transactions, 6 billion transactions have happened in a month. So this is the kind of a level that we have reached. The whole world is amazed at this. Now the next one, I would say that, the tax reforms. The GST was brought in 2017, and in a very short span of time. Just imagine that in India, with such diverse, so many states, union territories, they are all having their own tax collection system, and then multitude of taxes, and then the barriers, checkposts, and then the union government also having their own tax. So just imagine that almost, about 20 to 25 different kinds of taxes were getting imposed by different governments, and the state governments and then the union government. All those could be merged, and then we have come out with one common platform through which today the taxpayers are able to pay taxes. They can, their entire life cycle also is being managed. It's a huge system, unparalleled anywhere in the world. This kind of a GST would be there in many parts of the country, many parts of the world, but this kind of a unified platform through which the entire GST is administered is not present anywhere in the world. And then we all should be very proud of this. Then another major reform that took place is the corporate tax reduction, because it was also very necessary that if we want investments to take place in India, in 2019 we drastically reduced the corporate taxes, and today you can see that where are we, in the sense that Today, earlier, always there is to be some discussion, particularly in the discussion with the industry and then the various chambers of commerce and the industry, that our tax rates are high, as compared to the other countries. But now with 22% basic tax rate, and then for the new manufacturing units only 15%, we are among the lowest taxed countries in the world. So this is another thing which I think, because of that, the investment, the growth of capital market, can happen. Then the tax administration. Sunil mentioned in his introductory remarks that the tax administration also in a huge country like this, can that be completely faceless? In both the GST as well as the income tax, the attempts have been made to make it completely faceless. Then comes many policy reforms relating to the industry. The PLI was again a very, very major step, because we wanted Atmanirbhar Bharat, where the manufacturing would take place, the investment will take place, and then the proper incentive for the under the PLI scheme. Basically, PLI schemes encourages people to investment, and there the incentive is linked on how you perform, not and then how how better you perform in compared to your peers, and then you get the incentive. So the entire structure was designed in such a manner that it promotes investment, and then finally the capital market. Then the banking sector reforms. We have seen the series of reforms in the banking sector, the credit to the MSMEs, and then coming to the regulatory reforms. And here I would mention two very important things. This IBC, this Insolvency and Bankruptcy Code, the institution of NCLT and strengthening them, and then of course the NFRA, because this regulatory framework was something which was required to be brought in, required to be strengthened, and that is what has happened. So now in the view of all these, let's see that today, if you see the total foreign direct investment, along with this, when we are talking about this global scenario, Indian context in this, position of India in global situation, we are able to attract about $85 billion as an FDI. If you compare that with 4 or 5 years, we were in the range of around 40 billion every year. Now, because of these reforms, today we are in a position that 85, but then we have a long way to go, and we need to further increase that. So far as the retail investors are concerned today, because of all these the KYC being easier through Aadhaar, and then through opening the bank account, and the telecom, all these with all these smartphones, and then 3G, 4G, and now the 5G coming. We have 10 million demat accounts, 13 million, the mutual fund portfolios, in the sense that this is the kind of 130 million, 100 million demat accounts, 130 million mutual fund investors, and so far the unicorns are concerned, the startups, we are now the third largest unicorns after US and China. So with this background, what we are saying is that India today is poised, in this growth journey at a very, very critical position, because basic building blocks are ready. Because when the country has to develop, and capital market, of course, will be a part of that. If for that certain building blocks are required, today all those building blocks are in place. Whether it is the identity infrastructure, the telecom infrastructure, the retail investors, the people can, do all these transactions. So far as the investors across the world are concerned, today our, the corporate tax, the taxation policies, and then, the policy reforms like PLI, and then, the banking reforms, and over and above that, this NCLT, the regulatory reforms like NCLT and IBC, these are the building blocks which are already there today. And that is why, yesterday, in fact, our finance minister was, in a conference, she was speaking, saying that, all these things are there. Then what is stopping India from, from getting the investment to take place. And then she referred to, Hanuman, saying that, look, here we have all the building blocks available here. And that is where, now we can see today, where we can go. Now, coming to this role of NFRA, I would saying that, how this is going to be play a very, very important role. Because see, if anyone has to make an investment, whether it is a retail investor or the industrial, any of these institutional investors or the foreign investor, what they require is the trust in the accounting system. That the figures which are being reported by the companies, they should inspire trust. They need to be transparent. The corporate governance, right? What was the methodology earlier? If we can see, and if we can see that if you can see the history, right in 1927 or 28, that time SEC was not there. Security and Exchange Commission in US was not there. A very big scam took place. That is very famously known as Kruger and Toll case. There was a Swedish called Kruger. He was considered to be a matchbox king, and from the Europe. So what he did, that he wanted to establish business in US. So he, started, getting investment from, deposits and investment from the US citizens. And, instead of spending that money for setting up industry, started loaning to the European governments. And finally, because of this, the war situation, the government refused to return the money. And then finally, it led to a big scam, and finally he committed suicide. And that was one of the triggers why SEC was set up in 1933 or 34, right? And then, another very big scam took place, that is known as a McKesson and Robbins case in 1939, where, what we see today in many of these cases, we saw exactly, those things like, using the fake invoices to take loans, showing inflated revenue, all those things were done. And that fraud ultimately led to SEC starting the system of shareholders appointing the auditors. I mean, that was the kind of a genesis. Now, we saw, and then, but however, during the last 2 decades here in this century, we saw a major scam, this Enron, collapse of Enron. And then we could see that the way it was being done, and then the auditor was not, obviously was not able to point out. And then finally it led to the collapse of this. It is, it is kind of estimated that almost $63 billion was lost. I imagine, that is the kind of a thing that happened. Obviously, that led in US, this, the Sarbanes-Oxley Act and the SOX Act came, and then thereafter, the PCAOB was set up in US. And then, the several other countries like in the UK, FRC was also set up. And then the Japan, and then the Australia and the Singapore. In India, also we had our own share of, the various scams, like, starting from Harshad Mehta scam, and then this Ketan Parikh, and then the GTB, and then Satyam. And then in 2003 Companies Act, this the NFRA provision of NFRA was made, but that provision was not notified, and then this institution was not set up. And then in the following years, again, the several other, corporate failures took place. The Punjab National Bank, ILFS, and then, the various other corporate failure took place. And then finally in 2018, Yes Bank was the latest one. And so finally in 2018, NFRA was set up. So basically the world has moved from the self-regulation to independent regulation, and then that is what the system has been established. Now, the good thing about India, at least I feel, is that we as a country has adopted the IFRS, the international standards. Even the Ind AS, there are certain deviations, but then the companies have been given choice that they could, whether they can take those deviations. Otherwise, they can follow the international standards. Why it is necessary that today we are actually, the whole world is one global village, and therefore sticking to the international standards of accounting as well as the international standards of auditing would be, would inspire a lot of trust to the international investors and as well as even the domestic investors as well. So this is what something I feel that this institution, that NFRA, I mean, even though it has come very late, but then as we know, in Hindi, der aaye durust aaye. So at least this institution is there today, and all the building blocks. When I mentioned about all those reforms, India having achieved that, and plus another very important thing that we, as I mentioned before, that we have adopted international standards of accounting as well as the auditing. So therefore, there is no as such any gap. So and that actually helps, because if, let us say, if India had a different standard, then they always, there will be a lot of dispute. Just like, in the taxation system, because, the different countries have a very different, the tax system, and it leads to a lot of disputes, and then the, cross-border, transactions, there is a huge amount of problem. Whereas, particularly, in this case, it is the same standard. So therefore, the companies, and then they will have, that kind of at least they should not have any doubt. For example, let us say if any company, or particularly, let's say, any multinational company or any foreign company who is investing here, they know that how the accounting has to be accounts have to be maintained, and how accounts have to be interpreted, and how an auditor has to, how an auditor has to do the auditing. So at least, and then there are a lot of precedents are already available, because this PCOAB institution came in 2003-4. Then, IFRS also came around the same time. Plus, several other countries had this. So already they all have experience of 15, 16 years. And, we can take advantage of this. And that is exactly, what in NFRA we are trying to do. That whenever we are seeing any, any issue is thrown to us, we look at that how internationally, those deviations or those violations have been looked at, and what, and then accordingly we take our view. So what I'm trying to say is that, these institutions will actually inspire a lot of trust. And once you have the trust of people, investors, retail investors, the other big investors, foreign investors, I mean, the beneficiary will be the capital market. It will be much easier for them to raise money through the capital market, because the people will have a trust in those figures. Otherwise, if the trust is gone, then, then no matter how much money people have, how much the other system is there, the people will be very hesitant to keep their money. I'll just give you an example. About when I was growing up, and then, when few private banks came, there used to be a general tendency among people not to put their money in the private banks, right? People say that, why not put money in the State Bank of India, right? I mean, so it took a lot of time for people to, come out of that mentality, right? So similarly here, same thing, that the people generally in India were quite, averse to, putting their money in the capital market, stock market, saying that, it's like a gambling, right? I mean, you don't know, you have nothing. So, but today, the figure that I showed you, that 100 million demat accounts, and again, if you see the growth rate is about 14 to 15%. We are growing at, more than that, at that rate. Similarly, if the mutual funds, so this retail investors, and I, remember, again, I will refer to one of the statement of our finance minister. I mean, see, one of the reasons why, a few months back when the global market was, being very volatile, and that time, the Indian market was showing some stability, right? So that time, I mean, it was said that maybe, because of the retail investors are actually, holding that market here. So for all these things to happen, the trust is very, very important. And that is what, the NFRA will have to ensure that. And so this is from the NFRA point of view. Now, let us say from the company's point of view, right, what they could do. So I would share some of my experiences. That what I find is that, many of the cases when we look at, of course, the auditors are the fault. But then the many times I find that, even the company, they need to be aware in the sense that, their system, for example, the related party transactions, right? Related party transactions, if they are have to be at arm's length, then in that particular case, they have to proper documentation and other things, those things are very, very important. Similarly, if they are taking, the subsidiaries, if they're routing their transaction through the subsidiaries, they need to be very, very, alive and careful about it, and be very transparent about it. Because we have found many such cases, and we are, looking at that basic. And in fact, I made a list of some of the cases, like, these companies, particularly the impairment losses, that if the company has made certain investment in the subsidiaries, right, and if you are not uh, 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 evaluating the impairment loss, right, and then suddenly, in 1 year you'll find that that investment is not there, and then suddenly that company will collapse. And then even this impairment loss, not only for the investment, but the the trade receivables or the loans that have been given to the various other companies. These are some of the things, I would expect that the companies will have to be very, very alive to this. And so far as the auditors are concerned, what we have seen, during the last few years, that, the auditors have to go a very, very long way, because, in terms of their audit documentation today, and using the word called professional skepticism, questioning the management, all those things are there in the standards of audit. Another, the issue that we encountered here is that somehow there was an understanding, and among the very, very enlightened communities, some group of auditors saying that, all these standards of audit or accounting standards are principle based, and they are not mandatory, right? And this is something which, we try to dispel that in some of our the report that we have given and the orders that we have given, that you see, earlier it was principle based, but sometime in 2007-8, this IASB, International Auditing and Accounting Standards Board, they brought up a project called Clarity Project. And after that project, the both the accounting standards and as well as the auditing standards of audit, there the word should was replaced by shall. So once the word should gets replaced by shall, then where is this, the question that, it is not mandatory, it is a principle based, I will apply my judgment and so and so. And this I'm saying, not the view that, we are taking in India. This is the global, if you see certain orders of the PCAOB or the FRC, everywhere, because the word used is the shall. If the word used is shall, then the company will have to prepare their accounts, using that, thinking that the shall word is mandatory, and they have to strictly follow that. And same thing applies to the auditor, because the standards of audit also use the word shall. So therefore, I think, this is also very necessary that the that culture has to set in, because what we are finding is, because we are just 3 years old, and then we have only given only a very not many reports, But whatever reports that we have issued and the orders that we have issued, we are finding that. So I think, this is, and that is where I feel that, the industry bodies like FICCI can actually create a kind of an awareness among the companies, saying that, look, this is what the understanding is, that, maybe prior to 2007-8, the situation was different, and perhaps there was no one to look at that. But today, the should has become shall, and then there is a body called NFRA, which will actually go into the question of the compliance of the accounting standards and the auditing standards. Because there, India also there used to be a debate that whenever any authorities, like for example SEBI, questioned some company or the auditor, that this is how you should have maintained the account, or this is how the auditor should have done. Then the question was that whether that organization was competent to do look into this accounting standard and auditing standard. Now the NFRA is a specialized body created for that, and therefore that was a gap which has been filled in. And I think if you see in a long run, this will strengthen this this entire area of accounting and auditing. And once that is strengthened, it will definitely inspire trust. And once you have the trust of people, then the investment capital markets, I mean, those things are again, they will be beneficial. So I will end here, and then if there are any suggestions or any questions or clarification, I'll be happy to answer that.
Thank you, sir. This was very comprehensive, very useful. I'll come to Mr. Chajar for his comments and if he has any thoughts and views which he wants to share. But before that, just wanted to share with you, sir, that you are so right in terms of growth of the market and potential of our growth of our own market. In fact, we are currently preparing for 100 years of our independence in 2047. And FICCI also has set up a small group of people to really look at multiple sectors, including capital market. And we are doing some work. It is still work in progress. But I do want to share a couple of data points with you. We think our capital market by 2047 could be as high as $50 trillion. By and large, the GDP would be around $25 trillion, and the 2 times of GDP could be our market. You talked about the retail investor. We think it'll be somewhere around from 8 crores to 80 crores, 10-fold increase in the next 25 years. And just one segment, one vertical of the capital market, if we take just the mutual fund, the AUM of the mutual fund, which is around $500 billion currently, that can go up to 25 trillion in the next 25 years. So that's the magnitude of growth we are expecting. And therefore, you are absolutely right. We need to have the right building blocks in place so that we don't come across any hiccups, the kind of things which you talked about. I hope one takeaway is that we obviously proactive. We didn't wait for anything to happen before putting an institution in place. So that was actually a good point. Mr. Chajar, turning to you if you have your comments.
Thank you very much. At the outset, let me thank the chairman of the NFRA for his, sharing the vision. And he comes from, the financial side of the government, and therefore he's continuing as the chairman of NFRA is not only good for the country, but for the profession also, because we as the chartered accountants have worked very closely with sir, and therefore, definitely in times to come also, because, the various pillars of the economy, and especially when we are government is talking about 5 trillion economy, and as rightly said by Sunil sir also, that before anything happens, how we can be preventive as a country and as an entire ecosystem, so that we give the best to the investor community, the trust needed and all those things. Sir, I think taking this only further, collectively, one is taking action for any wrong reporting or something happening and all those things. But I think what is your view about NFRA taking the role of advising the entire ecosystem also, because some of the things now they are not coming to ICI, and many things are directly now coming to NFRA. So collecting those things. So what are your, sir, plan in terms of reaching out to the corporates and maybe to the auditing community, sir?
You have raised a very, very valid point. In fact, just a few days back, I was discussing internally with my members, because NAFRA is a multi-member body, and in the executive body, I have 2 other members. So, we discussed exactly this, that look, we are, either getting some reference from the SEBI or from the ROC or from the government or some complaints, and then, we are getting into this. Or in addition to that, we also select certain companies based on certain risk criteria, and then we go into the details of that company and also the auditor, right? Now the question is that, many of these points that we find, we are finding that many of these points are very common, right? And so we are now thinking of, at least starting with a system of some kind of advisory, in the sense that not advisory, advisory, in the sense that this is what we are observing in a certain number of cases, right? And so that what happens is that the companies also become aware, and then the auditors also become aware, right? Because it could be quite possible that, in this whole, Mr. Chade, you must be there. Let us say if a senior chartered accountant, if he is taking certain transactions in a certain manner, the most likely others will kind of follow that. Generally, this is how, the things happen. And then ultimately, so that is why the point that you raised, that how do we work with this entire ecosystem? So of course, one is that, have and this can be done in a multiple manner. One is that, issuing an advisory based on the certain issue that we observe. And other is that, establishing certain forum where, many of these things could be discussed further, saying that, look, this is the problem, right? And then how do we address this? And that is why I say the role of FICCI, role of ICI, the role of CII. These are the, the industry bodies are very, very important. So we'll be reaching out to, all of them and saying that, look, can we have some mechanism like this, so that, this, because this is not only an accounting and auditing issue, because ultimately, I re-emphasize that it is a question that, the people should be having the trust. For example, I will tell you, recently, day before yesterday, we issued an order. In this particular case, you can see that this company was NPA, and he was not either paying loan to the bank and also the interest. And because it was not paying, so in their accounts, that interest was not shown as a liability. Can you imagine that, the bank may have declared you as an NPA, but your liability to pay interest and principal remains, right? You can't just wipe off this unless until the bank has waived off. But at this, when we are, we mentioned that in our order, but we are finding in large number of cases like this, that, if the bank declares NPA, suddenly that profitability of that company increases. Now imagine, how can that happen, right? Unless and until the bank has written off your loans, then only, you can accordingly, treat that in your in your financial statement. So I think, some of these issues, and then, so the question is that NFRA, we can, we have any body will have a very, very limited ability to do a limited number of cases, right? Question is that, if we can use, the suggestion that you made, if we can work on that, this message can spread to a large number of companies, and then, all of them will become very careful. The management will become careful, because I'm pretty sure that, many of these cases, if the senior management, the audit committee or, the board of director or the shareholders, if they are aware, they will question this, right? So I think that is very important point.
Thank you very much, sir. Especially why, I asked the question, because, fortunately, Sunil is coming from industry side, you are from regulator side, I come from the, side, and many, these so-called new reforms like IFRS, Ind AS, they are totally new to the company. and the total guidance is not available. As we have for banking the separate regulator RBI, for insurance we have the IRDA, and still they are not very clear about roadmap for implementing those entire IFRS and Ind-based kind of systems into their respective the entities which they are governing. And I think if that clarity is not there about the road ahead, we may find a situation in one bank, certain areas are being treated by the management, and ultimately by the auditor some view has been taken. But anyway, sir, thank you for clarifying that. I think if Sunil is having some question, because I am looking at the time and your time is also very important, I will hand it over to Sunil Bhai, and then I'll again get it back and I can thank everybody for participating. Over to Sunil Bhai.
Praful, you can take as much time as you want. This is a good time of Dr. Pandey. So, just one additional point, and this is going back to what Praful mentioned. We understand NAFRA is evolving. It is still in the initial stages, 3 years old. Yesterday, a question came up in our interaction with the SEBI chairperson. In overall regulatory framework, which is followed by SEBI, and she clarified that it is principle and rule-based, combination of that. Broadly, there are principles, but ultimately it is all rule-based, and you use the word shall. Going forward, I'm sure NAFRA also, as it matures, would come out with some kind of regulatory framework, guideline, guidance, as Praful was mentioning, giving direction to the market. Is there any initial thoughts as to how you're thinking of structuring this?
Yes, this is very important because, the NAFRA is still in that evolution phase. And today, the NAFRA also needs certain strengthening in terms of, the regulation making powers, because, many of these things will come, when you have actually the powers to do this. So that's why I use the word that in absence of that, we'll be issuing the advisory circulars and those things. But at a certain level, the regulations and other things will have to be come in. And I'm very glad that there was a company law committee, which is chaired by Secretary Corporate Affairs, and has eminent people like Uday Kotak and Sardul Saraff, T.K. Viswanathan, right? And also from the ICAI, Amarjit Chopra, many of, the very, very eminent and knowledgeable people are there. They came out with a report in March 2022, just a few months back, and they have, made a very good suggestions, and we are working with the government to see that, if those suggestions are implemented, then what will happen is that, even these gaps, like, because what is happening is that, you have an Ind AS, you have a standards of audit, right? But you also will need, a certain amount of guidance to be made available, right? And guidance could come either in the form of advisory or certain regulations. Many of those things will have to be done. So those suggestions have actually figured in their report, and hopefully, that we are working on that, and we should be able to get that.
Okay, I'm conscious of time, as Praful mentioned, so we will have to probably leave it at that. Praful, over to you for a vote of thanks.
Thank you. It was a very enlightening session, and on behalf of the FICCI, on behalf of the Chairman Capital Market, on my personal behalf, and on behalf of everybody, this two-day conference was really, really important. And as you know, the capital market will always play a very dominant role in terms of shaping of the road forward for 5 trillion economy. And definitely, even though today's session was a last session, but we had an eminent faculty in terms of a person who had a first-hand experience of running a government, and also now sitting outside and watching the things, how they are, entire country, what was his vision during those times, whether all pillars are functioning in that particular manner. So thank you very much, sir, for coming here. So as I mentioned, on behalf of the FICCI management and on behalf of the Committee for the Capital Market, I am very much thankful to you for sparing your time. My thanks are also due to Sunil. Of course, he is the organizer, but the kind of interest the FICCI is also taking, and we also, as the auditor, we also interact many times with the organizations like FICCI, and I think it is the entire ecosystem which is working nice for the country. With this, thank you very much, everybody. Thanks are due to all the participants also. And over to Madam Bose in case she has some concluding remarks. Thank you very much, sir.
Thank you. Thank you.
Thank you, sir.
Very much. Thank you very much.
Thank you. Bye-bye.